Well, anxiety is mounting over Fed Chairman Bernanke's press conference tomorrow. And as we just reported, President Obama has added fuel to the fire by saying that Bernanke has, quote, already stayed a lot longer than he wanted or he was supposed to. And joining us now from LA to discuss all things Fed is James Barth. He's the Senior Finance Fellow at the Milken Institute. James, thanks for joining us. Let's get straight into it. President Obama spoke about Bernanke in the past tense. Now, his term officially ends in January. Are his days numbered? Is it given that there will be no third term for Bernanke?
I think it's unlikely. I think President Obama, by speaking yesterday about the fact it may be time for him to move on, was perhaps a little bit unfortunate, but I don't think Ben Bernanke wishes to stay, and it's likely that President Obama may wish a new person at the helm of the Federal Reserve, such as Janet Yellen, the vice chair of the Fed.
Well, you said that Bernanke doesn't probably wish to say himself, and Charlie Rose asked the president whether he would reappoint Bernanke if he wanted to keep the job, and Obama didn't really answer that directly. So if it's a fait accompli, when can we expect a formal announcement?
It's not clear. I think it probably will be a little bit more time before the president decides to announce what he's going to do with respect to the next Federal Reserve chairperson. We know he has to make a decision before the end of January 2014, but I think they're making too early an announcement may make Chairman Bernanke less effective in what he says as the current chair of the Fed.
Right. Well, as we mentioned, there are a couple of people that Obama is considering for the job, including Fed Vice Chair Janet Yellen, former U.S. Treasury Secretary Lawrence Summers, also in the running potentially Treasury Secretary Tim Geithner. Who do you think is the real frontrunner?
I think right now the odds-on favorite is Janet Yellen, the current vice chairman of the Fed. She had been the president of the Federal Reserve Bank of San Francisco and did a very good job. And apparently the president likes her, otherwise he would not have appointed her vice chair of the Fed. So I think right now she's the odds-on favorite at getting the position, should indeed Ben Bernanke give up the position or be asked to move on.
Well, what could we expect from Yellen?
I think, as was mentioned earlier in your newscast, she's likely to favor emphasizing unemployment over inflation. Right now, the inflation rate has been quite low, well below the Fed's acceptable target. So I think the unemployment rate in the United States at 7.6% is the bigger concern. So I think that's what she's likely to focus on, getting the unemployment rate down. I think, unfortunately, the Fed has done about all it can do with respect to reducing the unemployment rate and promoting more economic growth.
Well, Bernanke was appointed by President Bush, and he had that very challenging task of steering the U.S. through the financial crisis. He has lowered interest rates to practically zero. What do you think his legacy will be?
I think there are three factors, basically, one has to take into account with respect to judging his legacy as chair of the Federal Reserve. The first is, of course, the Fed's regulatory policies. I think there the Fed deserves relatively poor marks. I don't think the Federal Reserve did a good enough job leading up to the crisis to be sure that banks weren't excessively leveraged or invest in excessively risky activities, which they actually did. The second is after the failure of Lehman Brothers in September 2008, I think the Fed did a good job of injecting liquidity into the economy. And on that score, I think Chairman Fed deserves high marks. However, I think with respect to quantitative easing, purchase long-term Treasury securities and mortgage-backed bonds, I think the Fed has purchased too many too long. I think the third round of so-called quantitative easing, that is engaging those purchases, was unnecessary. I think the Fed has lowered interest rates as much as it can, and I think that has distorted prices in the marketplace. And I think a lot of investors in the reach for yield have invested in, again, riskier assets such as stocks. I think that's bad. And I think the third factor with respect to Chairman Bernanke's legacy is going to be the exit strategy, which was mentioned. If the Fed doesn't exit its holdings of roughly $3.5 trillion in assets in the right way, I think we're either going to get excessive inflation and we're going to get high interest rates, and that's going to choke off the recovery and lead to another increase in the unemployment rate.
Well, as renowned economist Nouriel Roubini says, the Fed exit strategy could be treacherous. We're going to have to leave it there. We've run out of time, but thank you so much, James Barth, Senior Finance Fellow at the Milken Institute.